is at 200 period simple. Okay, so let's not forget there are some very impactful psychological indicators such as the 200 period simple, which I think could be really important, and that's basically sitting at about 2600 on that Aussie Kiwi. Okay, all right, so there's a question here that's not quite on topic, but it is and it isn't. I think it's a good question, so let's discuss it. And that is, at what point can or will the uniqueness of the 5-minute chart begin to be affected by the data of a higher time frame? I kind of take a different perspective on time frames. I believe that the larger time frame is built by the shorter time frames. I think most people kind of think as the larger time frame as the direction that everything is going to go in, and that's kind of true because a daily chart, of course, has the most psychological value. But the daily chart's uptrend was built first by a 1-minute, then a 5-minute, then a 15, all heading in the same direction until they culminated into the continuation of some sort of direction on a daily chart. So I think the building blocks are those shorter term time frames. If there's going to be a correction in a longer term time frame, it's going to begin on the shorter term time frame. But I will say that the daily chart, the psychology of that end of day time frame, will often be where prices will tend to continue. In other words, let's say we have a congestion on a 5-minute time frame. When there's an overall direction that's fairly clear and the sentiment is very strong, okay, here's a good example. Let's go to the 15-minute chart of the Euro-US dollar, which right now, as you can see, is more or less distribution or neutral. Okay, it's moving sideways. Slight bullish bias, but more or less sideways and neutral. Okay, if people are wondering which way the market's most likely to break from within this congestion here, and you take a look at the daily chart, the overall psychology is bullish. And therefore, if you are looking for potentially some sort of movement, you're doing so under the overall psychology of bullish momentum. So would you then say the likelihood is for a move higher? It's no guarantee, especially in distribution. We can move down to this low, we can move up to this high, whatever, but a lot of people feel more comfortable trading with what we call the overall trend. To me, the overall trend is defined strictly by the daily time frame. So if I'm looking at a short-term time frame and I'm trying to determine which way, like here's the 5-minute, I'm trying to determine which way the market's most likely to break, or I want to trade on the side of the overall psychology, I'll be looking for long opportunities, bullish setups. A short here would basically be contrarian to the overall or daily psychology. But you know what? If we're to correct, which we have done before, I need the 5-minute to break down. I need the 15-minute to break down before I see a correction on the daily. So when the market is neutral, I just assume go into a no bias, right? I just assume go into neutral stance, wait for the prices to break either support or resistance, confirm that with the MACD. That's classic Momo momentum trading. Okay? But a lot of people feel much more comfortable following that overall trend. So that's the way I look at multiple time frames. I believe in analyzing multiple time frames. I believe in the relevance of the power of the daily time frame as a reflection of that overall psychology. But I still got to remember that if we start to correct, it's going to be a breakdown on this 15-minute time frame. Okay? But thank you for that question, Mark. You know, a lot of people like to look at overlaps of different time frames for Fibos. I'll be frank. I know that it's valuable, but it sometimes gets very messy. So if it's pretty easy to pick out, if it just pops out at me that a 23% on a 60-minute chart might be overlapping with a 50% per se, for example, on the 15-minute chart, great. But I'm not going to go looking for those. Again, you really got to keep in mind the realistic nature of looking for very nuanced things with limited time. I think one of the things that a lot of traders, especially when they're in demo mode, one of the things that tends to get away from them is the speed at which the market moves. You've got to be nimble. You've got to have analysis styles that allow you to look at a lot of time frames, a lot of charts, while still being able to keep all this information in mind or noted and then react to it. And the more nuanced your analysis is, the more time you'll be spending on a single pair or on a single time frame, and you're liable to miss other things. So you've got to be able to move around quickly from pair to pair, from time frame to time frame, and see the market as a whole. Otherwise, you're constantly going to be missing things. So I don't want analysis that's going to take me a long time. Okay, that's something to keep in mind. I don't want analysis that's going to take a long time. And again, I hope you all, for those of you that might be joining me for the first time here today, feel free to check out the content we have on the Interbank FX YouTube channel. We've got a ton of videos over there. Check out the Daily Trading Edge. We've got all sorts of blog updates over there where a lot of your questions might be answered, especially that YouTube channel. Okay?